Hi everyone. Today let's talk about savings. Then we'll talk retailers just for a moment before we get into the economic data. Then we'll take a look at the charts, as well as my results for the day and my thoughts going into tomorrow's session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open, as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So talking about savings, Americans are running out of it. You can see here they accumulated about $2.1 trillion in savings during the pandemic, which is an absolutely colossal amount of cash. It makes sense why we've been having inflation. And you can see the drawdown of savings is 1.9 trillion, so we've spent nearly all of those savings at this point, which again makes sense why we're seeing a slowing of that inflation, and hopefully we start to see this come back up as people get enticed by those higher interest rates on savings accounts as well as money market accounts. Overall, for the markets, this means there's a little bit less money to be spent. We might see a little bit of a drawdown in earnings, and that's going to affect companies on the discretionary side much more than the staples side, which means we could move towards an environment where people are not willing to take as much risk as the upside seems a little bit more limited. In a similar theme, moving over to retailers, we see Dick's Sporting Goods dropping by nearly 25%, massive slide. Part of this is over the risk of theft, but we see it also in Macy's dropping 14%. Retailers are definitely starting to struggle. Again, this is discretionary spending. We're going to see this start to pull back as the people spending the money are running out of money, just like we talked about in the previous article. And retailers like Target, Home Depot, and Lowe's are also warning about the same thing. And to support the point even further, we're seeing discount retailers like Walmart, TJX, as well as Ross doing a little bit better, which again means that the retail customer is looking for those cheaper prices and better discounts. Moving over to the economic calendar, existing home sales, slightly lower than expectations, but not terrible. Moving over to tomorrow, we actually have a fair amount of stuff. Building permits at 8 o'clock, global PMI composite at 9:45, U.S. services PMI at 9:45, new home sales at 10 o'clock, and then crude oil inventories at 10:30. And then a little bit less interesting, 20-year bond auction. I do tend to pay attention to these to see if it's higher or lower than the previous read. Moving over to Max Payne for the end of the week, you can see still sitting at that 441 area. It's a little bit less than 1% higher than current prices. Still a ton of puts, put call ratio at 2.3, options over 1 million now. And this is starting to build out in terms of structure. Lots of puts, very few calls. And I would expect this to go up a little bit higher towards the end of the week. Might still dip a little bit in the short term. We'll look at that on the charts. But at the end of the week, I do expect to be higher than current prices. Moving over to the charts, starting off with the SPY on the hour and the 4 hour, you can see we hit that upper trend line, came right down, tested the lower trend line. If we see a little bit of a rally into tomorrow's session, then we know this structure is still holding together. If this level breaks here tomorrow, then we're looking at 435. Again, I still am expecting higher prices for the end of the week, which means we could absolutely see a little bit of a rally tomorrow, dip on Thursday, rally into this zone on Friday. Of course, it's probably not going to be that easy, but it is interesting to see a dip down into this level, finding some support. Looks like we're rallying a little bit after hours. Momentum looking to turn in tomorrow's pre-market on the hourly chart. 4 hour chart, momentum starting to fade a little bit. You'd like to see this get back above the 50 line on RSI, as well as the 21 EMA sitting at 438.73. We are below that just by a few cents. In the after hours, if we can't get above that level, that would indicate that we're probably going to see a break of this trend and a push a little bit lower. Maybe we see a dip tomorrow, consolidation rally on Friday. That would be interesting as well. Couple of scenarios there, but watching this trend pretty closely, as well as that 21 EMA on the 4 hour chart. Moving over to the NASDAQ on the 15-minute and the 4 hour, you can see we rallied up. As soon as this trend line broke, we'd moved much lower, consolidated at that level. Doesn't look as bearish as the SPY to me. You could argue maybe left shoulder head, right shoulder forming. That would be interesting. But you can see we're above these longer term EMAs on the shorter time frames. You do have to pay attention to that. And then on the 4-hour chart, still in this downtrend, but we are trapped between the 55 EMA and the 9 EMA right now. So 363.63 and 367.36. That's a kind of our range right now. I'd like to see it get above my 364.84 level. That would be nice. Highly traded zone up here at 366.37, indicating a lot of selling pressure at that level. If we get back into that area, you might look for a double top, and that would indicate that's kind of the end of this move, at least for now. Moving over to the Russell and the Dow, you can see the Russell still holding this trend, but did hit that 21 EMA on the 4-hour chart and got broken down from that level. So we held 183.28. That was the level I was watching yesterday, so I'm still in the same trades. Makes sense, we are starting to rally a little bit after hours. I would look for a little bit of a push tomorrow, just like the other ones. Dow, on the other hand, looking much weaker, consolidating now, still below the EMAs on the 4-hour chart. And technically it did close below my level at 343.23. This looks more bearish than the other ones. If it gets above that level, maybe you can trade off it, but right now it doesn't look good. Moving over to the equal weighted S&Ps, we got another bearish day, 0.39% to the downside. It's sitting right on that 144 EMA on the daily, and it's still holding that 200 as well. As long as it holds these levels, I'm still looking for a little bit of a bullish push. If these two levels break, then I'm looking at 145.08. And then below that, I have 142.50. Moving over to Apple and Tesla. Apple continued on its little channel here. Did not hit that highly traded zone, did not hit the next level. So you're in this range. Could absolutely trade for a push to that upper level or the 55 EMA at 178.57. Still bullish momentum. RSI got above the 50, so it looks okay. Still seems to be struggling on this rally. It's not accelerating or anything. And there's some clear overhead resistance still. Tesla, big push on the pre-market, hit that 55 and then broke down right to our level again, 232.57. If that level breaks, then you're looking for a bigger push lower. Right now it's holding after hours and you could still trade that to the upside. But again, if that breaks, then you're going to be looking for a bigger push down, maybe down to the 21, sitting at 225.60. Moving over to Broadcom and NVDA. Broadcom jumped up pre-market, same with NVIDIA, hit those levels and then pulled back basically to the middle of yesterday. Momentum still bullish on NVIDIA. Broadcom still ticking towards bullish. Obviously, these are both going to be dependent on NVIDIA earnings, so we have another day before we're looking at that. But right now, I do think these are driving the market, and that's why I keep talking about them. I'll be watching these closely until we get earnings on NVIDIA. Moving over to staples and discretionary. Staples continues to waterfall off. Tried to get above this level, ended up breaking down once again. Next level is at 70.85. And that goes all the way back to the lows here from March of this year. Definitely interesting. This trend is definitely bearish. Discretionary, similar to everything else, gapped up pre-market, sold off, finished basically unchanged, slightly bearish after hours here. Momentum starting to tick lower. If it holds here at the 9 EMA, then we're in good shape. If that level breaks along with VWAP sitting at 163.80, then we're looking down to 162. And the next level below that would be 158.03. Moving over to energy and oil and gas, I just wanted to highlight these because we were watching this rally and now that seems to be petering out. We had a high, set up a lower high, we're pulling back. Similarly on oil and gas, it looks like we have a double top forming here. If this 145.92 level breaks, we could be looking for a bigger push down. Still have VWAP sitting at 143.79. Similarly here on energy, watching 87.37. If that breaks, watching for 84.56. Moving over to breadth, we still see momentum starting to tick higher, but breadth still going lower on both charts. 50-day average closed on its low, still in this zone going back to the May lows. 200 still moving lower, took out that 49.76 level, not looking great. Could absolutely push down to 43.55, kind of the low from this consolidation before we had that dip low, again going back to May. Overall, we thought that this wick yesterday might have been a nice little bounce, but we took that out today and it still looks more bearish. Moving over to the dollar on the 4-hour and the daily, hit that 55 EMA, took out the trend line, rallied right back up to my next level at 103.64. If this level breaks here tomorrow and pushes up towards that 104.40 level, this could absolutely be a big indicator that equities are going to be moving lower. That would also invalidate this rising wedge. We would break above this trend line, which we did tag on this move, push above that level, push up to 104, and that should spell some weakness for equities. Moving over to J&K and TLT. J&K still chopping in the zone, hit that 91, broke down a little bit, gapped up pre-market, makes sense, pretty much like everything else. TLT on the other hand showed some signs of life, got a bullish engulfing candle, almost filled the gap up to the previous one, definitely interesting. Could just be that this is pretty oversold and it's just showing a little bit of a retrace before we get a continuation, but it is interesting to watch. Moving over to the volatility indices, MOVE index broke out yesterday, pulled back right to this trend line. If this holds, we get a continuation. That should spell lower prices for TLT. Makes sense. VIX, on the other hand, moved a little bit lower, dojied, still holding the trend, still could go higher, but momentum is cooling off a little bit. We're right at the SMA, which is interesting. Again, I'm expecting higher prices towards the end of the week, so this could hold and then dip down. Might just hold up until we get NVDA or Jackson Hole on Friday with J-Pal. Couple of things on the horizon for the VIX, but it is interesting right at this trend, right at the 144 EMA. Moving over to my accounts, I did lose a little bit of money along with the rest of the markets. I kind of got chopped up a little bit. I was able to recover most of it, but you can see down, it says $100, but I think it was a little bit more than that, maybe a little closer to $200. Overall, not terrible. Market was still down. I was down a little bit, makes sense. I was bullish going into the day as well. Looking at the IWM, no change to my positions here. I still have a covered call at 184, and I have a put at 182. Hoping for a little bit of a rally on the IWM Qs. I still have 2 covered calls. I decided to buy back 2 of those calls and sell some 364s. So I let 100 shares go along with a covered call. So I'm back down to 200. I also sold some 367s for 72 cents each. And then I sold a 359 put for 2 days out for $1.29. This is after the NVDA earnings, so I'm not necessarily going to hold that one to expiration. We'll see how it plays out. But right now I do have it on. And if we see a little bit of a rally, I might take that off in tomorrow's session. Overall, slightly bullish on both of these going into tomorrow's session. Let me know down in the comment section what you think of the U.S. retail consumer and total U.S. savings. Are we going to see a drop in the retail customer, or is it all just a little bit overhyped to the downside? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.